Good morning, GameStop investors. It is Wednesday, January 7th, 2026, and we have breaking news from GameStop Investor Relations. Ryan Cohen putting to rest the bears' claim that he's just going to sell his stake in the company and move on, leaving everybody hanging. No, Ryan Cohen and GameStop announcing a long-term performance award for the CEO, and we have breaking news live from a investor gathering just down the road. Let's take a quick look.
You know what? I'm not leaving. I'm not leaving. I'm not fucking leaving! The show goes on! This is my home! They're gonna need a fucking wrecking ball to take me out of here! They're gonna need to send in the National Guard, a fucking SWAT team, because I ain't going nowhere! Fuck them!
In pre-market trading this morning, investors clearly loving the news. The stock ran up to $22. It's down a little bit at $21.26 right now from this morning's high. We'll see what happens during the normal trading hours and the rest of this week. But let's dig into the details about this long-term performance award that the company is proposing for Ryan Cohen, and that will be subject to our vote as shareholders in March or April. Even I have to read out on social media and deal with in the comments of my YouTube videos, people saying Ryan Cohen is just going to leave you guys hanging. People don't like it that I believe that Ryan Cohen has a plan. And what I've told you guys is you must be patient to allow that plan to unfold. I don't want to hear any of this talk about MOAS tomorrow. If it happens, great, but that is not the thesis of my channel. I'm invested in GameStop for a swing trade, or if the company continues to make positive progression in their transformation plan, possibly a big move up if the company announces some transformative use of the cash on the balance sheet. That is the bull thesis that we have right now amidst the bad news of the company closing down brick and mortar stores. They still have a ton of liquidity and a very solvent balance sheet that gives the company a lot of optionality to transform. And so there is a bit of fear mongering that goes on out there on social media from people that want you to think Ryan Cohen is just going to take an exit in 2026. I think that today's press release is a direct response to those critics, because this sets up a healthy award to Ryan Cohen over the long term if he significantly increases the market cap and the cumulative EBITDA of GameStop. Let's dig into the details. We're going to talk about the milestones set up in this press release, and I just wanted to give you a quick preview of what those look like. The market cap hurdles in the 9 different tranches start at a market cap of GameStop of $20 billion going all the way up to $100 billion, and it is paired with a cumulative performance EBITDA hurdle between $2 billion and $10 billion. Just to put that in perspective, you probably know GameStop right now has a market cap just over $9 billion. And if we look at the Q3 cumulative results, 39 weeks ending November 1st, 2025, the EBITDA for the 39-week period was $136 million with an adjusted EBITDA of $178 million. I will put a link to this press release down in the video description in case you want to click on that and read the entire thing yourself. But let's go through the details. GameStop announcing a long-term performance award for Ryan Cohen. The headline bullet point: compensation for the CEO is 100% at risk and contingent on achieving significant performance goals. The award incentivizes growth to a market cap of $100 billion, aligning compensation directly with stockholder returns. And this is something that I think all of us love to see. A direct alignment of compensation with performance of the stock. If only every company would align their incentives for the executives in just this way. The award is designed to incentivize Mr. Cohen to achieve extraordinary growth. In order for the award to fully vest, the company's market cap would have to grow to $100 billion, and the company would need to achieve $10 billion in cumulative performance EBITDA. Under the award, Mr. Cohen receives no guaranteed pay, no salary, no cash bonuses, and no stock that vests simply over time. Instead, his compensation is entirely at risk, meaning he will only be paid if the company achieves significant market and operational goals. This structure ensures that Mr. Cohen's incentives are directly aligned with creating long-term value for GameStop's stockholders. They spend a minute highlighting some of the progress on the transformation to date. I get it. It's not exactly performance-wise where everybody would like to see it, but the transformation that has occurred since 2021 is undeniable. There has been definitive progress. The market cap of the company up from $1.3 billion to $9.3 billion. Expenses, looking at SG&A, decreasing from $1.7 billion in that time frame to $950 million, a 44% reduction. And in terms of profitability, the company has transitioned from a net loss of $381 million in fiscal year 2021 to a net income positive $421 million for the most recent trailing 4 fiscal quarters. The details of the performance plan are as follows. The total award consists of stock options to purchase just over 171 million shares of the company's common stock at a price of $20.66 per share, but the award is divided into 9 tranches that are eligible to vest only if the company achieves both a market cap hurdle and a corresponding cumulative performance EBITDA hurdle. The first tranche vests only if GameStop achieves a market cap of $20 billion, twice where it's at right now. We're talking $40 per share. Each subsequent tranche requires an additional $10 billion increase in market cap up to the maximum of $100 billion. In addition, there are some operational milestones. In addition to the market cap growth, Mr. Cohen must meet profitability targets. The first tranche requires a cumulative performance EBITDA of $2 billion with targets increasing for each subsequent tranche up to a cumulative amount of $10 billion. If the company does not achieve the minimum market cap hurdle of $20 billion and the cumulative performance EBITDA hurdle of $2 billion, no options will vest and Mr. Cohen will have no opportunity to receive compensation from the award. There is no interpolation between hurdles. The specific targets must be met in full for a tranche to be earned. The other important thing to know is that this compensation plan is subject to our vote as shareholders. The new performance award was created by GameStop's board of directors, with Ryan Cohen having recused himself after careful discussion and analysis and in consultation with a third-party compensation advisory firm. Although the board reached an agreement with Mr. Cohen regarding the award on January 6, 2026, the effectiveness of the plan is subject to the approval of GameStop's stockholders, who will be asked to approve it at a special meeting that is expected to be held in March or April 2026, just a couple months away. For that vote at this upcoming special meeting, Ryan Cohen will recuse himself from the vote so that GameStop's other stockholders have the opportunity to determine the outcome. And I think we all know how this is likely to go. There's, in my opinion, almost no reason that someone would vote no for incentivizing management to these sort of lofty goals. All right, now that we've covered the press release, let's do a little bit of opinion and dreaming. I know there's going to be some bears that say this is just a way to string investors along. I don't believe that Ryan Cohen has bad intentions. So feel free to leave your comments, but I don't agree. Maybe I'll be proven wrong, but I don't think so. This is a plan that tells me that the company has some things going on in the background that they are working on, that they're not just working on cost cutting, but they are thinking about some major transformation of the company at some point in the future. When we look at a market cap of $100 billion, we're talking a share price with the current shares outstanding of over $200 per share. That does not happen without some major transformation, use of the cash, a merger, an acquisition. I don't know, but I don't think that this is just a tease to keep people hanging on. Just does not make sense. Companies don't typically do that sort of trick on investors. When a compensation plan is set up, there are typically levels of what the board thinks can be achieved realistically, and then there are some stretch goals. And I think that's what we're seeing here with these 9 different tranches. I don't know what the board decided, is realistic and what is a stretch goal, but I think you see the full gamut of realistic market cap and stretch goal market cap, depending on the execution of Ryan Cohen and the executive team. I did not see any timeline or end date in the press release, and that is one bit of additional information that I would like to have. Is there an end point to this award, or does it stretch out 5, 10 years, infinity? I don't know. That'd be good information to have. I am curious what you guys think. Also, let me know down in the comments. I think that this is a fantastic plan. It gives me some comfort that the company does have a plan, that Ryan Cohen ain't going nowhere. He's not fucking leaving! Thank you for watching, guys. I am Tony Denaro, and I will see you on the next video.